What's going on, my friends? Good afternoon, officially. Early video today. It's been a long time. Hopefully you've been watching the reels. I'm trying to get the content out there. Staying busy. Doing my best to stay busy. Rough market for us mortgage guys. But as you know, I have been predicting this market since 2021. Told everybody in 2021 that, hey, hope you save some money for 2022. You're going to make about half as much money. I'm talking about people in the industry, real estate mortgage. 2023 wasn't a great year. 2024 hasn't been a great year, although there's been some highlights. We did see rates dip decently. I've just been listening to our good buddy Jerry Powell, good friend Jerry. He was giving his press conference after the Fed cut rates a quarter point, so we're going to talk about that. Presidential election, some weird stuff going on right now in a couple of states. A couple of days after the election should be over, they're still counting votes. And that's stuff that there's no way that good things are happening if something like that is going on. It's not because of extreme integrity why votes are still being counted. It's because obviously cheating is taking place. I'll show you a couple things that need to be highlighted. I was really a one-issue voter on Tuesday. I voted for world peace. That's the main thing I wanted. Trump proved for 4 years he could handle that. We immediately have seen action taking place in that regard, even just since he's been elected, not even inaugurated, not even in office. And the other thing, if I was to say, hey, what's your second issue? My second issue would be voter ID, because of the things I'll share with you here in a bit with regard to inconsistencies in voting and just the fact that the votes haven't been counted yet. How could that be? The votes haven't been counted yet. 2 days? 6-year-old can count. My son could count. You have hundreds of volunteers. There's no reason why those elections shouldn't be done. So we'll talk about that in just a minute. Something important that I'm looking at. So the Fed cut rates 0.25%. I was listening to Jerry Powell speak here, and he didn't give us a whole lot of substance other than this. And this is what's interesting. And this is where we've really seen a shift in what the Fed is doing. And then we're going to take a live look at the mortgage bond chart here in a moment to see exactly what the impact has been from what has been said so far. But what he said here, he said it very plainly and clearly that we're not at their target inflation figure, but that we're going to get there, and we're going to slowly get there. So in the past, where you would really need to see the Fed would need to see them get to their target inflation point before they start cutting rates. Now they're cutting rates ahead of getting there. Now, the idea behind this is soft landing, right? It's about, hey, we don't need to slam into our target and then have to whipsaw back. If you've ever raced a car in the mud or played a video game where you do that, it's very hard. You can overcorrect. You're going back and forth, back and forth, back and forth. That starts to get tough. So the concept behind what he's talking about actually makes sense. And so we see the quarter point cut, very likely going to get another quarter point at the next meeting, and we'll see from there. But this should be good long-term overall for assets, anything priced in dollars, which includes crypto, which went crazy yesterday. We'll take a look at that as well today. This will be a relatively short video today, maybe 30 minutes the most. We'll look at Bitcoin, which is soaring, new all-time high, and stocks soaring, new all-time highs for a lot of different stocks. Well, I should say stock indices, not necessarily individual stocks, although some individual stocks have hit all-time highs. So prices are soaring. Also should be good for mortgage rates eventually. So what we've seen, and we'll talk about that. Let's go ahead and just dive in and look at the mortgage bond chart. Okay, we'll pull this guy over. And you see we kind of hit sort of a wall of consolidation right here. But what's interesting is that this green area that I pointed out here is really just a bullish gap. It's really just a bullish. It's not a fair value gap because it's between two candles, but it's just a gap. And this was a holiday right here, July 4th. So it's the July 4th gap. That's it. And we bounced pretty hard off of that. This red zone here was old support that has turned into resistance. We really need to get through there. And this downward channel here is going to cause a problem at some point, but hopefully we can get through the other side of that, and that'll send us higher. So that's kind of what I'm expecting to happen, is that right there at some point. Now, when bond prices go up, remember that means that rates go down. So we want to see bond prices going up. When bond prices go down like this, heading into the election, that causes rates to go higher. that's why we've seen 6% become the normal for FHA, VA again, and 7% become the normal for conventional, high balance conventional. This conforming balance conventional is still in the high sixes, but so you're seeing 6s and 7s again instead of 5s and 6s. We really kind of thought we were on the right path, and I still think we are. Presidential elections are weird, though, particularly with the bond market, especially in this particular market, because stocks and crypto are soaring. What money manager, what big money wants to stay in these bonds when stocks and crypto are soaring? And the Trump pump, or the Trump rally, as they're going to call it, which could last for years to come, is just starting. Well, I'll tell you this. I'll tell you exactly how I'm positioning myself for this, because I am not as invested as I want to be. But I felt like it was prudent to leave some on the sidelines during an election like this, where we could see drastic move one way or the other. If Kamala wins, stock market probably sells off hardcore. So I was positioned, think about risk. And I do think we are going to see the initial euphoria sort of run up, like, okay, hey, things are going to get great. This is always what happens. Like when a company announces, hey, we've got this new technology, it's going to be great for us in 5 years, or it's going to be great for us over the next 5 years, you'll see it sort of pump up, and then reality will set in. It'll usually retrace the whole move and then come back up. And that's kind of what I'm expecting to happen. We'll see some euphoria. Things are going to move up. Then we're going to kind of have a settling in situation where you're like, oh, well, the numbers don't really justify this yet. And then boom, we're going to see things come down. Now, what's really landmark though about this, and let's pull up the crypto charts here. This is really landmark about the Trump victory from an investor standpoint, in other words, is the fact that we have a pro-Bitcoin president, not just pro-crypto president, pro-Bitcoin president. And we got through this all-time high that was made back in March, this bearish order block, which had rejected price 1, 2, 3, 4, and then 5 times. 5 times that bearish order block paid off for the bears, and it just got knifed through on the night of the election. Okay, so after midnight, so it shows up being on the 6th Wednesday, but just rocketed through that thing. I mean, a fair value gap through a major resistance level. So Bitcoin, again, my targets for Bitcoin still the same. I still have this 101,500. So I'm just calling it a $100,000 target. I think it's a pretty reasonable place for this cycle. I think we could hit 80,000 here pretty soon, get to the -2 on this. And then we'd have to reload after that. If we get to the 100K, I think there was going to be a lot of selling at 100K psychological level. A lot of people want to cash out at that point. I think we'll see a pretty big sell off there. But in the meantime, it would make total sense. We went up to 80K and then completely retraced back into this buy zone here between -1 and -1.5, which happens to be split down the middle by this old resistance level. Imagine that. That's likely to become support. So I'm going to wait and see how this peels off. But I want more Bitcoin. I want more Tesla. Tesla is smoking it as well. A lot of people, you should see the article that they put. I mean, the picture that they used. Is it off the front page now? Talking about how Musk is going to do under Trump presidency. Well, Musk is going to be involved a lot. He took that upon himself. And now you can see this thing is just running away. I mean, from the election, yesterday was up crazy amounts. Today it's running up even further, touching 300 or really close to 300, $2.99 a share. And so this is a level we've seen many times before with Tesla, probably a little more oomph behind it this time than before. So I don't know where we're going to see the buying opportunity here, but I will be waiting just for the euphoria to sort of settle in. Remember, this happens. This is where people ape in. Okay, I promise you, big institutions aren't putting money to work right now. Now, they might be getting out of a short position. They might be buying because they're exiting their incorrect bet, but they're not buying right here. Okay, that's not happening on institutional level. This is retail purchasing these things. So I just be careful if you're just sort of aping into some of these things that are up big, and it's not advisable. It's not necessarily a great move. Now, it may make money in the short run. If it's a trade, hey, I'm going to jump into Tesla at 300 and ride it to 320 or something like that. It may work out for you. But if you're looking for long-term investments, which is what I'm looking at, that is not going to be the way to go. But I want more Bitcoin and I want more Tesla. And those have been my 2 investments for a very long time, as you know. But those are the ones I really want more of that. Okay, so the Fed cut a 1/4 point. basically said, hey, we're going to just guide this sucker in for the perfect soft landing. And maybe they will. Maybe they will. I do have comments enabled. If you want to say what's up, you want to say hi. We are live on the Book of Faces, live on Twitter, LinkedIn, etc., YouTube, all of the above. And I know a lot of people watch this later, but if you're live, you want to say hi, please do. So it's coming, the new Fed statement. Okay, I'll put that link as well in there. They didn't really change much. You can just see that they believe that the conditions currently warrant their corrective action, which really tells you that they overcorrected by raising rates so much. Otherwise, this wouldn't be necessary because there really isn't any catalyst for cutting rates at this point other than to be like, okay, all right, they'll peel it back a little bit. That's what's really going on. Okay, now I've got a nugget to share with you here, and I will put this link as well in there. More homeowners just started pulling cash out of their properties. Here's why. Who cares why? Who cares why? People are wanting cash outs. People are asking me about HELOCs all the time. This is the link. This is the hack right here. This is what you do. Okay, I'll put this link in the description on YouTube. What you have to do is when you're looking at doing a cash out, should I, just cash out, refi my current home, or should I get a HELOC? Which makes more financial sense. And this isn't everything, but this is a very important factor and something you can immediately look at. Hey, what's the balance? This is what we call a blended rate calculator. So it calculates the blended rate or the average rate that you have on all of the debt. So if you owe $450,000 on your home, you got 3.25 or 3 3/4, you want to get a $50,000 cash out. You want 50 grand to do home improvements, pay off debts, whatever. What's the most efficient way to do it? Well, we would quote you on the HELOC, so we could put that rate in there, right? And then we calculate, and it tells us what the blended rate is. And you can see right here, the blended rate in this scenario, $450,000 first mortgage at 3 3/4, $50,000 second or HELOC at 10%. The blended rate is 4.375. So unless you can get 4.375 or better, you definitely don't want to do a traditional refi. You want to do the HELOC. Okay, keep that debt separate, keep your lower rate on the bigger debt. If you can get lower than 4.375, then we have to start looking at more specific details about like, okay, but this 450,000 is not the same for everyone. If you just bought your home a couple of years ago and got 3.75, which a lot of people did, that's one thing. If you bought it 15 years ago and got 3.75, that's different because now your effective interest rate, because you're further down the line on that amortization, your effective interest rate is actually much, much lower than what your note rate is. And so starting that over has consequences. So this is why I want to give you the tools so you can do some of these things on your own, but a more technical analysis will need to be done if you really want to know if it's smarter to do one or the other. And sometimes it's basically splitting hairs and it's like, what do you prefer? Sometimes it's not. One thing to keep in mind with the HELOC is that since it does function like a credit card, even if you only need 50,000, I'd recommend getting a line for as much as you can without increasing the rate. So if you can get one for 150,000 and get the same rate, then do that because you only need to use however much you want to use, but you can give yourself additional credit that you could have access to should you find an opportunity for something later or need it for some reason. So that's one way you can utilize it. So this blended rate calculator will also be in the description. Okay. Mortgage demand is trapped with first-time homebuyers. This is a really interesting article, which is designed to for mortgage professionals to understand the market. But I think everyone can benefit from this, understanding that mortgage demand being trapped with first-time buyers is just a function of the fact that sell buyers are really not coming to the market at this point in any quantity. So people who already have homes, they want to sell that home and buy the next home. Those people they're not here yet. Not in droves. I mean, they're there here and there, but they're not here in big numbers yet because rates haven't gotten low enough for that to make sense yet. So yes, mortgage demand is sort of trapped right now amongst the first-time buyer community, which is complicated because first-time buyers tend to make a lot of mistakes or they don't understand things. And so it's difficult for them to be the ones who have to carry the torch in this market. It causes a lot of strange things to take place transactionally. It causes a lot of listing agents to be very weary to ask for proof of funds and things like that, and to want contingency removals on time, very vigilantly, because they know they're dealing with first-time buyers. and they know that the first time buyer can make mistakes or think, oh, well, we thought we could back out of this thing. Yeah, we want to get out. They're not confident that they know what's going on. So this has created a paradigm that's quite interesting in the overall marketplace. And a lot of these things will be shaken out as the market moves higher when rates start to really consistently go lower. And that's right around the corner, probably 2025, but it's right around the corner. So keep that in mind. While this may be true for now, it is not for much longer. And first-time buyers, I just want to issue a warning to my first-time buyers. This is a warning. I'm telling you, you may control the market right now, but when that goes away, when you no longer do, when the sell buyers are there, when the seasoned buyers and the sideline buyers who aren't first-timers come back to compete, they will have more money to put down than you. They'll have more experience. They'll know a little bit more about what they're looking for. These are just common things. And those things will all add up in their favor. So right now, first-time buyers really have the opportunity to sort of control a little bit of what's going on. That will not last for much longer. You have maybe 6 months, maybe, probably less. So if you are a first-time buyer, you're still in the best opportunity zone for you right now. And I don't know that it gets any better for you. I'm sorry. I know you may not like the way things are right now, but it's probably not going to get better for you. And there's a real wake-up call that's coming for a lot of first-time buyers who are waiting until rates get lower. They're going to wait till those rates get lower. Then they're going to try to get in the market and realize that they cannot get into the market. And that unfortunately is going to take place. And I can't get I can't get the message to everybody, but that is what's happening. That's what's going to happen. Man, CNBC has been doing this lately. I don't know what's up with this. It just disappears. I mean, you can see the headlines right there, but where's the article? It's just gone. So weird. Whatever. All right. Here's some information from NAR. The profiles of buyers and sellers. I think this is really, really interesting. Most interesting of them all, probably the most important of them all, is the median first-time buyer age has increased to 38 years old. I remember when this was high 20s for a long time. I bought my first house when I was 21. A lot of us were buying houses in your early 20s. I remember the data when the numbers on the average was in the mid to high 20s. And then I remember when it got to the low 30s, and we did a bunch of data on that at 33. Last year was 35. Now it's 38. Dang. The propaganda is working. They've convinced so many people to live a life of cyclical monetary slavery, basically. When you're a renter, you are stuck. You don't own anything. You need to make money to pay the rent. If you can buy a house, you own a home eventually. You don't have to make a payment on it anymore. But if people start buying houses at 38, there's going to be a lot less people with paid off houses. If people were buying houses at much younger ages and paying them off, previous generations, it put them in such a good financial position. That's why the boomers have so much wealth. Next generation is not lining up that way. And 38 is crazy. 38 is crazy. So I'm proud to be working with and focused on helping veterans and active duty service members buy homes using the VA home loan benefit, because a lot of my buyers are in their low 20s. And so imagine that, to get to an average of 38, how many first-time buyers are much older than that? 40s, 50s, 60s, first-time buyers? It's wild, man. Absolutely wild. Totally blowing me away. So just keep that in mind, that this campaign to keep you out of real estate is working. And if you want to change things, you have to take the bull by the horns and get into the market. You just do. It's so obvious. I mean, how long will it take for people to realize that this is why this is going in this direction? It's wild, man. Absolutely wild. Okay. So went through that. Okay. Here's what I was going to show you. Let's see. So we got election results. We're waiting on the House, waiting on the Senate. There's a couple things, though, that are pretty weird here that I want to point out. First of all, one of the things that Donald Trump will need to clean up in his administration is what's going on with elections. Too much weird stuff. Should not take more than a day. Much less developed nations do their elections all in one day. Paper ballots. We don't need computers. Paper ballots, voter ID. The law must be followed. That is one of the most important things that he needs to do in the next 4 years. And I'm going to show you why. So let's see. This is House results. We're not going to look at that. We're going to look at Senate race. So right now we have in Pennsylvania, there's a Senate race where the Republican candidates have 31,000 votes, 98.7% is in. How is this not counted already? It's been 2 full days, 2.5. How is it not done? What's going on there? Republicans have already taken the Senate, but that should be seat number 53. Then you have 2 more outstanding cases here. One in Nevada, where Brown and Rosen have been going at it after each other. Brown was ahead by quite a bit at the end of Election Day, but now Rosen is ahead by that much or more. That seems fishy, but that's not the one I'm going to talk about right now, although you can go back and look at the numbers on that one, and the same concept will apply. And this is where we need clarity, why we need more transparency, and why we need election results that are auditable. Mind you, in states that don't require voter ID, these ballots are not connected, like California, for example. They passed a law in California that you cannot look at an ID of someone who wants to vote. What would be the purpose of that, if not for fraud? Honestly, what's the purpose, if not for fraud? Because without having an ID attached to a ballot or having an individual attached to each ballot, then there's no way to audit the results. And that seems to be the purpose. So when we look at these states like this, okay, Arizona is the one I'm going to point at, Kari Lake, who has gone down there in Arizona, has run for multiple seats, and has not won anything, but she has taken on the cartels and all these bad guys. And she has some enemies down there. The bad guys don't like her one bit. So she ran for governor, didn't get it. Now she's running for Senate. It seems to be a very close race, but here's what's strange. I want you to look at these numbers. This one says that currently we have 69% of the votes have been counted in 2.5 days. That, first of all, is a red flag. What is going on? There's over 1 million ballots still left to count. How? How's that possible? It makes no sense that in a legitimate situation that's possible. So Gallego has 1.235, and Kari has 1.182. Okay, so let's take a look at those numbers. Those are the numbers. Now let's go over to the general election and just look at how these voted. Over here, the Republican candidate got 1.3 million. And the Democratic candidate got 1.167 million. So you're telling me that people went in here and voted for Trump, but didn't vote for Kari Lake. And not just a few people, a lot, like 10% of the people who voted for Trump and then voted for the Democrat Senate candidate. This makes no sense, guys. This is the stuff that needs to be investigated. In fact, I've sent these things already to people who are probably already all over it. But these are the kinds of things that give us no confidence in what's going on. How can you have this kinds of irregularities when it comes to the vote? But just common sense doesn't play out. So I hope we get to the bottom of whatever's going on in Nevada and Arizona. And I hope they call the race in Pennsylvania. I can't believe they haven't called it yet. But these are the kinds of things, in my opinion, I'm a two-issue voter. World peace, don't want the wars. Done with that. Call me a hippie all you want. I don't care. I don't want the wars. It's not necessary. Every country can run itself without the wars. We're not going to have wars under Trump. So I'm happy about that. And number 2, voter ID. This has to be cleaned up. The will of the people must be served. The rule of law must be followed. Plain and simple. So those are the things that I think are the most impactful things that are taking place today. From an investment standpoint, we go back to looking at, all right, well, how do we play this then? From a real estate perspective, what's going to happen over the course of the next 4 years during the Trump era? What's going to happen with stocks? Well, if Trump follows the policies that he um, promoted during his campaign, which he tends to do, which is unlike any other politician, if he does, we could see some radical changes here that could cause the whole scope of how we look at the economy change as far as just what's possible. And what I mean by that is if he does eliminate the income tax, if he does move forward with tariffs to replace that, you're talking about keeping the wealth here in the United States instead of sending off to places that use child labor and all this stuff, slave labor, because it's cheaper. No, let's make it more expensive so that we can encourage people to create here, so that these big companies will take their manufacturing plants that they were going to make in Mexico and make it in the United States instead, because it'll be actually be cheaper for them to do that. And more people will have more money in their pockets because they're going to get rid of taxes. And then boom, now here you go. We have a booming scenario, a golden boom. In fact, they even said, I believe on the front page of CNBC, look at CNBC. Why are you doing this, guys? Why do I have to type in the address? It's super weird, y'all. Okay, it looks like it's gone. But basically it said something like, mergers and acquisitions. The Wall Street was basically like, hey, you're going to see mergers and acquisitions. You're going to see reduction in taxes. You're going to see more money available. Will that cause problems with inflation? That's the big question. If we see, a huge boom and more money is being made and more money is being spent and asset prices are going up, is that going to cause issues with inflation? Potentially. But one of the things that was really, really strange about Election Day was the dollar really, really surged. So we have something that's conflicting here, and this is what's making it a little bit difficult to determine what the best investment course is going to be, because the dollar got really, really strong on the heels of the Trump election, which doesn't jive with Bitcoin breaking out to all-time highs because it's paired against the dollar. But it just shows you that if the dollar can go that strong and Bitcoin runs that much, how much higher is Bitcoin going to go? Seems like a lot higher. It also seems like potentially the strength in the dollar is just simply on the heels of the fact that there is potentially going to become some sort of standard. Right now, there is no standard for the dollar. It's not backed by anything, nothing, except for the United States military, which isn't nothing, but it's not backed by anything of direct value, like gold from the gold standard, for example. So Donald Trump and Senator Loomis has said after she won her reelection, we're going to create a Bitcoin strategic reserve for the United States, similar to the way they've done in El Salvador. Now, if that happens, then you see Bitcoin will go nuts, but it also could help them reduce the debt, which does strengthen the dollar, which balances out the run of the Bitcoin. The strength in the dollar is good for savers. Okay, that's good for people who don't own assets. It's good for people who, want to keep their money in a savings account or a CD. They don't want to get out of the cash. It's good for them. The weaker dollar is better for asset prices. So if we do see a stronger dollar, but we also see an economic boom, is that possible? It is. If you do everything correctly, and it seems like the plans that he has in place would lead us to that. If they do, then it'll be basically par for the course. Actually be the easiest possible market for investors, because stocks will go up, crypto will go up, and real estate will go up. But not in a crazy way, in a more demand-centered way instead of a commoditized way. And so that should actually be really healthy. Now, from a stock perspective, that means lots of back and forth. Crypto perspective, lots of back and forth, lots of ranges that just sort of break and then continue to range and then break. That's what I would expect, not some just straight up stuff like we've seen. This move, this Bitcoin move right here, this kind of straight up move, that will probably peel back. Will we go to 80,000 first before it peels back? Maybe. I'm going to be waiting for the peel back and then to see that we're ready to resume before I start deploying more capital. I'd recommend everyone do the same. And we could say some similar things about, Tesla, which is my number 2 holding. I do want to add to this, but I want to see it come back. I almost want to see it retrace the entire election move, come back to this area right here, this -1 spot, and buy it there in the 270s. I think that's very, very reasonable to expect. Another thing from on the investor side is oil. So traditionally speaking, we need the weekly chart for oil. It's too choppy otherwise. So right now it's in a downtrend already. But notice this. Whenever we have seen, and this is so the oil trades have always been the easiest ones from a political standpoint. Always. It's been my best trades of my life have been on oil and using the USO right here, which is an ETF. And if you look back, you can see like when we had this really big spike, okay, and this was during the Obama administration. It was shortly after, or right when President Obama was being inaugurated, and whatnot. No, he was in early 2009. So this was right before. So the run up happened right before that. Oil ran up. Whenever it gets above, $100 a barrel, that's when you want to sell it. And whenever you see someone who's pro-oil production domestically, like Donald Trump, get into office, you're going to start to see policies on day one of his administration. I mean, what does he say at every rally? Drill, baby, drill. We're going to drill. We're going to use the resources we have here. We're going to bring those jobs here. There's going to be a lot of people who get six-figure paying jobs to go work and do this work. And they're going to create and domestically create and farm essentially this oil. So that should cause oil prices and gas prices to go much lower. So the question is, will it run up between now and then as the Wall Street market makers set up this certain decline in prices? Are they going to do that? Possibly. I'm expecting that. So I've got my eyes very closely on this for short, and I would do that via puts to see oil prices go much lower during a Trump administration. It is quite likely, though, that move will be somewhat quick and not a sustained move. In other words, you won't see prices go down, for a long period of time. It'll be kind of like quick. All right, establish the new normal, and then we'll kind of consolidate there. So you're gonna have to be in to catch that move. It's not quite time yet to look at that, but we do have a bearish structure right here on oil. So I'm expecting oil prices to go down, gas prices to go down. How else can you play that from an investment standpoint? Well, if oil prices go down, then and it's not because of lack of demand, it's because of policy. That should create cheaper everything. So it's now cheaper to ship everything. It's cheaper to get from here to there. It should create more money going in other places. So it should stimulate other things. Shipping companies should do well with that. Any company that relies on fuel, so dry shipping companies like freighters and things like that. Also, like the FedExes and companies that rely on lots of fuel, the airlines, they should all get a boost from that. So just something to keep in mind. If you're looking for investment ideas, those might be a couple more with kind of the policies that we're going to expect. And we know what to expect because what he said, he does what he says, and what he did previously. We can go off of those things and kind of expect, all right, here's what's going to happen. And that should give you a few ideas on what to do. Now, I will do more videos about Bitcoin, particularly on the road to 100K. But again, right now, there's euphoria in the markets. And there's also a lot of short covering going on. There are people who are betting on a Kamala win, expecting the market to tank, who are getting smoked at the moment. And so they're having to buy just to get out of their short positions. So there's still a lot of that going on. Once that subsides, once retail's injected all their money in at these levels, then I think we can expect to see the pullback that should probably be purchased and in general, because most likely we're going to see higher prices. Now, could it be a bigger pullback? Could we see almost like a crash? It's possible. It's possible because of how much higher we're going to go over the course of the next 4 years and change. It's very possible that the market makers might just nuke the market. In other words, go take all the liquidity. Everyone who's buying right now on the euphoria, everyone who bought the day before the election and whatnot, who hasn't closed their positions, just go and take all of their money. Stop all of those people out, capitulate all of them completely, and then start the slow 4-year grind higher. Okay. So if we do see like a crash scenario, particularly before Inauguration Day, then that would be a scenario that I would be looking to purchase and start some positions and add to some positions. So let's hope that we don't see that, but it is possible, and it would actually mean that we're going to see even higher prices in the future if we get that in this scenario. In this scenario, because we're long-term bullish here, if we get a big drawback, it's just like when you're shooting a bow, the further you pull it back, the further it goes. Same kind of thing with the markets. If you don't get much of a pullback, it's hard for it to really go far. But if they really pull it back, really knock that thing down, then it's going to go much higher. And that would be the perfect easy scenario for me, for anyone who's watching this. Because ultimately in the markets like this, where we can kind of expect a certain direction based on policy, there's going to be a lot of fake outs. They're going to try to capitulate people. It'll be like these slow grinds higher and then big drops, and then a slow grind higher and then big drops. Those big drops are going to be to take people out because they don't want you to make that money. They want that money. But I'm here to tell you that if you are a traditional investor listening to your financial advisor, as you should. I'm not a financial advisor, so listen to your financial advisor. This is not financial advice. It's just what I'm doing. Things to consider, things to think about. If you're just one of the people who does it the simplest possible way, hey, I put $1,000 a month into my, IRA or whatever, and I buy mutual funds with it, next 4 years are going to be great. It's going to work out very well. Your dollar cost averaging is going to work, and prices are going to go higher, and you're going to keep staying invested. Should be a great time to be a financial advisor. Just tell people to put their money to work, and that should do the trick. Okay, I'm run over. I've got to go. I've got to get back to some people. So let's do this. Let's play me out of here. I do have there it is. You guys need help with anything? We get a quote on a loan. Questions about mortgage loans, buying a home, investing in properties. Ooh, I got you. There's some investment opportunities in the state of Missouri right now. I got my eyes all over. If you're interested in that, just let me know. I'll be here when you need me. Peace.